Good morning, everyone. I'm Vince Lancy. It's 7:35, and this is the GoFix Market Rundown. Today, we'll be discussing the Trump-Riyadh Accord, what it means, and we will be touching on an update for the Comex Deathwatch. That'll be in premium. Basically, we're going to look at China's growing influence as it statistically manifests. There's the home page. Let's look at the markets. 10-year yields are 446 and change. The dollar is 100.59, down 33. The S&P 500 is 59.02, up 20. The VIX is 1822, down 1. Gold is 32.35, down 14. Middle of the range, I think. Silver is 32.90, unchanged bid. Copper is 464 and change, unchanged offer. WTI 63.09, down 65. It was up earlier. WTI is down 1% today. Okay. Retracement. Natural gas 350, down 6. Bitcoin 103.900, down 200. Palladium 958. Platinum 997. Gold, silver 98 and change. Soy 1065. Corn 433 and wheat 519. Kind of diverging there. Chinese stocks are up again, reflecting renewed optimism about a U.S. deal. Got to watch what they're doing. Their markets are doing as well. Okay, so there's the front page. We're going to discuss the top center there. U.S.-Saudi pact delivers record $142 billion in defense sales, $600 billion in investment commitments. We're going to very briefly touch on Newmont Mines that was put out yesterday. Another buy recommendation from Goldman. Really cheap. I can't believe how cheap it is. Industrial metals breathe a sigh of relief. And let's get to it. So Trump's Riyadh Accord. Yesterday, if you follow us on social media, you saw that I had an excited personal moment there with the announcement of Trump's $600 billion secure deal with Saudi Arabia. So let's go through the facts. So Trump's Riyadh Accord. In Riyadh, the United States and Saudi Arabia finalized what is being described as the largest defense sales agreement in U.S. history, valued at nearly $142 billion, as part of a broader $600 billion investment package. The deal, signed by President Donald J. Trump and Saudi Crown Prince Mohammed bin Salman, marks a significant capital infusion into the U.S. strategic sectors. Initial projects tied to the agreement span several high-priority areas, including defense, energy, artificial intelligence, infrastructure, healthcare, and technology. According to the fact sheet, the first tranche of deals strengthen our energy security, defense industry, technology leadership, and access to global infrastructure and critical minerals. It's very significant. What it means, just painting the big picture here in context of history, in context of what we need, and in context of what we're going to get out of it. In February 24, we finally drilled down and got to the bottom of what needs to change in the U.S. and what needed to change if we wished to remain at the same level of standard of living, speaking about how you live, the comforts of life, as a nation and as individuals. We had to find a buyer for our bonds, assuming that the other buyers would never come back. And there are all different ways you can do it. But ultimately, the most logical path is to get foreigners that used to buy our bonds to buy our stocks. And I don't mean just buy stocks. I mean direct investment, which is the preferred way of implementing what Trump talks about, was get the companies to move here. Same idea, but a little bit more nuanced. Anyway, So let me just read a couple notes that I have here as part of a bigger post I'll be putting out in the next day or two. Excuse me. What it means: if the United States wishes to maintain even a fraction of its current standard of living over the next 50 years, it must confront two facts. It needs to produce more and find new buyers for its debt. Since the 1970s, the U.S. has relied heavily on the dollar's reserve status and the recycling of foreign capital through treasury purchases. That model, under deglobalization, under mercantilism, is now exhausted. We wrote extensively on this in 2024. That post is called "We Will Buy Our Own Bonds Now." And it describes something has to give in order for us to fix things. And the solution, pointed out pointedly by Valentin Just at Credit Agricole, focused on foreign direct investment. That was something that we latched onto and understood, and so we ran with it for that post. Now, that's where we were then. Either we get someone to invest in our equities so we can buy our own bonds, or we suffer the consequences of a large deficit and no future. Yesterday's announcement that Saudi Arabia will invest directly in U.S. LNG infrastructure marks a critical milestone in America's effort to address its structural debt issues, restore industrial capacity, and reassert its standing on the global stage. Why am I so excited about that? Why was I? Because the administration has not lost the plot. All the other good stuff aside, I know the devil's in the details on this stuff, but the administration hasn't lost the plot. And the plot was Trump's vision. He's a patriot, okay? He monetizes everything. He lines his own pockets while he's a patriot, but at least he actually does do the right thing for the country. Besant's strategy, these are the pieces that have to move. This is what we want to do with tariffs, with this, with that. And then coming back to Trump's tactics, which are admittedly risky, as he is a carrot stick type of person, a one-man good cop, bad cop person. But throughout all of that, constellation of things that has to go on, I was worried that they would lose the plot. Having secured an anchor tenant in the new U.S. economy, the Saudis, dominoes should begin to fall in Europe, Russia, and soon China. There are plenty of caveats here, but the main plot is being honored. It's very exciting. It's a new version of what we did in the 70s with the Saudis. Maybe it'll become they're taking petrodollars and they're reinvesting them in the U.S., but not just buying properties, buying Times Square. They're investing in the next energy, LNG, right? Which means they'll be investing with us for our version of thorium. Anyway, we know the Saudis play both sides of the equation, but at least they're playing both sides of the equation again, as opposed to under the previous administration where all they did was push back. Moving on, it's very exciting for me. We'll see how it plays out, but it's very encouraging. We didn't lose the plot. Related posts: Goldfix PM Newmont Mines. Goldman points out that Newmont Mines is undervalued and is probably even more undervalued when you update their projects, their joint ventures that are going on, and how those joint ventures are on target so far. Interestingly, though, they didn't raise their price target. They do, however, look, all-in sustaining cost is the profit margin for miners, all-in sustaining cost from, let's say, 2018 is $1,000, whereas it was $300 back then. And miners in general are lower. Not all of them anymore, but there are certain indexes, that are still like punished. The arbitrage army wants to sell uh, gold and buy miners. Anyway, I'm not going to do that this time. Morgan Stanley calls the top for now. U.S. Saudi pack delivers. We just mentioned that. Found there's very early signs of resilience. We're going to show some charts for that in premium. So China's gold influence. Before we get to premium, let's take a look at the charts. That's scary to look at, right? Uh, four markets I'm looking at, really, actually. Gold is at the bottom of that ledge. So call it 3,200, right? But this is where the China wall of buying is, the Great Wall of Buying, let's call it. So let's hope the bears continue to hit it and exhaust themselves, and we get a re-rally later on. That's on the top right hand side. Top left hand side, silver is coiled again. Now, does that mean it's going to break out tomorrow? No, but you can see my levels there, my alerts. This is a Bollinger Band thing. So silver above 33.26, I'm going to buy it. Silver below 32.10, I might sell it. Those are the levels. Okay. It definitely matches up with the trading range that we're in right now, but the market has done enough, right? So either stocks rally and this thing ticks higher, dragging gold with it, and we have a very nice rally, or I'm missing something here and the market traverses lower through that area. But you can see we're in the middle of the range of those two dotted lines there, and that's how it works. Lower left-hand side, that should be the dollar. I mentioned like an inverted head and shoulders. Well, it's cracked, so maybe we're going to back test it and go lower, or maybe we're just rotating higher like this now. Who knows? But the impulsive behavior of the dollar coming out of this inverted kind of lopsided head and shoulders has lost its momentum, right? Okay, on the right-hand side, there's gold. The silver chart looks similar to that if you're a Bollinger Band person. Gold's not tight enough yet, but I'll put up silver to give you an idea if you're watching these charts with me. Here. There's the two dotted lines I mentioned. See these bars here? Bars mean to pay attention. And my stuff says pay attention even more now. So let's see what happens. I'm just trying to bite my tongue. I don't want to get too bullish, at least not yet. Okay. In summary, Trump's accord in Riyadh with the Saudis is potentially monumental towards reinvigorating our economy in the way it needs to go, resolving geopolitical disputes involving Russia and Iran and Israel, and serves to mitigate the risk for our deficit. It really is, Trump spent the last 3 months turning the table over. Well, now he and Bessent are sweeping the table, shooting the moon, whatever you want to call it. And then the implications are, well, this is basically what makes America great again. This is what makes America great. The rule of law and the right situation that allows ideas to grow given the right environment. It ain't perfect. but it's still the best one out there. Okay, and then finally, we're going to go through the gold Comex, I should say, Deathwatch. All right.